Hello and welcome to today's video. Today I will cover weekly performance of classical and crypto market, earnings from Tesla, FOMC decision and some upcoming events. Last week the S&P took a breather, ending the week down 1%. Several major companies reported earnings with mixed results. Microsoft dropped 6% while Meta and Apple gained 6%. Tesla remained flat, Amazon rose 1% and Google gained 2%. The biggest loser of the week was Nvidia, which fell over 15% in just 1 week. In my view, the market overreacted to Nvidia decline. At the end of the day, they are still selling chips and their technology will remain essential for future innovations. Even in a worst case scenario where chip price decline, it doesn't mean Nvidia is in trouble. In fact, there are even rumors that DeepSeek, the AI company causing some concerns recently in the sector, may be using Nvidia chips for its project. Given this, I believe the sell-off was excessive. As I mentioned in the last video, Bitcoin looked promising while holding above 100k for an extended period. However, the very next day it briefly dipped below that level, even falling under 98k at one point. Despite the volatility, Bitcoin is still fighting to stay above 100k level. Although it may seem like Bitcoin isn't making big moves right now, it ended January with a 9% gain. If history repeats itself, we could see more positive months ahead, as February, March and April have historically delivered average returns of over 10%. Last week Tesla announced its fourth quarter and full year 2024 earnings. As expected, vehicle production and delivery numbers were lower, which led to a 6% annual drop in automotive revenues. Despite this, overall revenues increased by 1%, largely thanks to the energy segment, which grew by 67% compared to 2023. Tesla's GAAP diluted earnings per share were $2.04, a 53% decrease from 2023. With Tesla's share price at $400, this results in a traditional PE ratio of 200. While many people are excited about Tesla's future potential, I worry that realizing all these future revenue sources might take longer than expected, leading to short to mid-term stock volatility. Looking ahead, Tesla's management expects the vehicle business to start growing again in 2025, partly because they plan to launch new, more affordable models in Q1 of 2025. The company also boasts a strong cash position, over $36 billion. Additionally, the energy segment is expected to grow by at least 50% on a yearly basis. In summary, although it wasn't a stellar year, Tesla managed to slightly increase its overall revenues by developing new business segments. With a robust cash position and minimal debt, the company has a solid financial foundation. Even if traditional fundamental ratios suggest the stock is expensive, Tesla's future projects make it interesting to watch. In the latest FOMC meeting, interest rates were left unchanged. The Fed will also continue selling treasury holdings as part of its monetary tightening strategy. However, they remain flexible and may adjust their approach based on new inflation and employment data. If any of these measures start causing issues, we could see additional rate cuts which could benefit market performance. The upcoming week is packed with exciting events. On the earnings front, major companies like Amazon, Google, Palantir, Pfizer and Uber are set to report, among many others. Additionally, as we enter a new month, several Bitcoin miners will release their latest monthly updates. From a macro perspective, new employment reports will also be released, which could have a significant impact on the markets. Based on recent trends, weaker employment data might actually be seen as good news for the market, as it could increase the likelihood of future rate cuts. That's all for today. If you liked my video, like and subscribe as a sign of support, and nothing. See you in the next video. Bye!